good things happen to growth stocks. We invest in growth stocks for the long term and don't worry about all these things that everyone that you read about or you hear on television every day.
Ron,
that's what's
appreciate
given us this good performance.
I appreciate your long-term view, but for investors who maybe don't have the same time frame as you, would you tell them that they would be foolish, or they were foolish, if they were selling last week in an 800-point decline for the Dow? Would you be telling them, stay the course, don't worry about everything that everyone's worried about all around you?
I would be telling them that, and in fact, so my family and I are now, I had a negative net worth in 1970, and we're now the largest investors in our mutual funds. And I invest even after that's the case, I still invest every single month. And in the first week of August, when the market was acting erratic and when it had fallen sharply, I tripled the investment that I make every month in the funds that week. So basically, when I invest, month in, month out, every month, consistently, that's what advisors do. That's what advisors for individuals, financial advisors for individuals, they're getting paid for advising people how to manage their money, or manage money for them. And the average mutual fund probably makes 6 or 7% a year. The average investor in the funds makes 3 or 4%. The reason for that is they're always buying at the wrong time and selling at the wrong time. They buy high and sell low because they're emotional, because they read what is happening and they say, oh my God, this is going to be terrible. I should have my money in cash. And so that's the way they react. And a good financial advisor or a good, brokerage firms where they have their models, their job, and they earn their salt by getting people not to sell when it's a bad time to sell and not to buy when it's a bad time to sell, but trying to do things consistently. I've spoken before on your show about what millennials should do. And millennials, I believe, somehow when they get to be 22 or 23 years old, if they get their parents or someone or somehow get their hands on $5,000 a year and invest $5,000 a year, what that's going to do for them, if all they do, they invest in a low-cost index fund. That's what they should do. Get a low-cost index fund, make 6, 7, 8% a year, and what happens, that $5,000 a year, at the end of 10 years, it's $100,000. At the end of 20 years, it's $300,000 if you get historic rates of return. At the end of 30 years, that's 20 years. At the end of 30 years, it's $800,000. So you get to be almost a millionaire by investing $5,000 a year. That's what you have to do. You can't be afraid.
But let me ask, you said that's if we get historic rates of return. And that is one of the big questions that's circulating right now. People are wondering if we can possibly get those same rates of returns when you're looking at negative interest rates, when you're looking at $17 trillion in sovereign funds that are negative interest rates. Do you think we can still expect to get 5, 6, 7% a year historic, like we have gotten historic?
And what I believe is that when capital is very inexpensive, as it is right now, when you have this disruption that's taking place in Europe, in Japan, negative interest rates, you're not going to make money if you're getting negative interest, obviously. But I do think that, historically, that I think the growth is going to be faster going forward than it has been historically. That's number one. Faster. No one says that. And the reason for that is that you have technology that's making businesses more efficient and giving more opportunities. Knowledge for mankind is doubling faster than it ever has. Healthcare is getting better and better. Children born now, and 100 years from now, children born now will live to be 1/3 of them are going to be over 100 years old. The Facebook chairman is giving his money so that he will, cure the 600 diseases that when you present to a hospital. There won't be them anymore. There'll be other diseases, I suppose. But the standard of living for the average person now, people talk about being left behind, but the standard of living for people right now is better than the wealthiest man in the United States or in the world 100 years ago. Mm-hmm. And that's going to get better and better and better. This is an amazing time to invest, an amazing time to be alive.
Having said that,
so I'm very optimistic.
You're very optimistic, but in the notes you did say that growth is a little slower right now. That doesn't concern you?
It's slow.
On the short, no, it's all. The growth in the economy ebbs and flows, and so if you have hotels and they're a little softer right now than they had been, they're up 2 or 3% same stores instead of 3 or 4%, or China is having some kind of a significant slowdown in growth because of trade wars and tariffs. Of course, you go up and down, and it's a wave. But long term, the value of your money, our biggest picture, not thinking about the events that you react to every day, the big picture that we have as a firm, is that the value of your money. So the government wants to borrow money from you, and you get and pay you back less than they're taking from you. But the big picture is that in addition to that, they're sworn to devalue your currency. They're sworn to make your money worth less and items were going to cost more. That is their goal. And so when that's the goal, you're lending someone money who's going to pay you back and has the ability to control how much that money's worth. So everything, we think that dollars fall in half in value every 17 years. So if you have $100,000 in the bank today, in 17 years it'll be worth $50,000 in purchasing power. 17 more years it'll be worth $25,000. 17 more years it'll be worth $12,500. That's how come that when you buy the Louisiana Purchase, you buy it for $13 million. That's a third of the country. Or when you buy Alaska, you buy it for $17 million. That's a big deal. So what happens, we pay 3 cents an acre for Louisiana Purchase. That's not just because they've made a good investment. It's because governments for thousands of years, democracies for thousands of years, the reason they stay in power is that they get people to invest and create jobs and build a strong, vibrant middle class. That's their goal. So the way they make sure that you, who have been very successful in our country, are forced to take your money instead of putting it in a mattress and invest it. That's what their goal is to do. Now you have a chance for your investments to grow more rapidly than you ever have before. Look at all the things that are happening in the world. I just was reading, to touch on Tesla for a second. We're an investor in SpaceX also. And they just sent a Tesla car around the sun, just past the sun. I was reading the paper the other day. Just went around the sun. That's pretty cool. So there's all of these things that are happening in the world that are, providing growth. I mean, Elon Musk was talking about how they want to set off nuclear weapons and nuclear bombs in Mars to create an atmosphere. So, I was talking to Gwen Shotwell.
Can I just ask you? Go ahead.
So I was speaking with Gwen Shotwell about a couple of weeks ago, and she is the president and COO of SpaceX. And she said that, in her opinion, the only one who has a bigger vision than Elon for SpaceX is her. And she was talking about how she expects to get to other solar systems, other galaxies. That's where she thinks to perhaps meet whoever is there.
But Ron, sometimes you make these investments and it may take a very long time to pay off. It may not pay off. In the case of Tesla, I think your cost basis is $218.74. That's just around where the stock is trading right now. This is one that you've been.
Is that exact, Bex, or is that the?
That's
yes.
I'm not sure. My point is that your cost basis. Not to say that this won't eventually pay off and be a great investment for you, but to this point, it has not been. It's something that you're waiting for because maybe it's got a long lead time. How do you determine between the ones that are going to pay off and pay off quickly? How long do you have to stick around, and what do you think about the Tesla investment right now?
Well, with Tesla, there are many investments that we've made where it's been a very long incubation period that we have made, which is taken for the investment to prove out. When we invested in Vail between 1996 and 2006, we made a very modest return, 50, 60, 70% over 10 years, and then we made 7 or 8 times our money. When we invested in Wynn Resorts for 2001, we were one of the founding investors. And Steve Wynn invested $250 million, and a Japanese investor invested